I'm Eddie Knoell.
And I'm Tom Knoell.
Welcome, everyone. This is the Mortgage Brothers Podcast, and today we are talking about the difference between forbearance and deferment. A lot of questions out there.
Holy cow, does it get any better than that? And not to make light of it, but boy, we are still in some very interesting times right now. And we're still getting a lot of calls on this whole, forbearance thing. What is forbearance? What's the difference between forbearance and deferment? Does that just relate to student loans, or is that also mortgages? What's going on?
Right. I mean, that's right. And when we actually talk about forbearance or deferment, usually it's in the context of a student loan. But again, this episode is to answer the questions of what the difference is, but also it's timely because a lot of these inquiries are happening now around the coronavirus and the COVID-19.
Right.
The CARES Act that came out talking about forbearance and how banks have our customers have 6 months. They're eligible for 6 months of forbearance. And so, but again, whether you are having this question, whether this is in the future, whether you're watching this video and the virus is over, what we're going to go over is still going to apply.
This is what we call, well, actually, is it evergreen?
Yeah, it could be evergreen until, I guess, the official forbearance rules change, but they have been the same for a long time.
Right. Okay.
Or at least defining them.
So are we saying that the forbearance rules have not changed because of the COVID-19?
Well, I guess there's no such thing as forbearance rules. The CARES Act has rules that protect customers and borrowers. We're basically going to define what a forbearance is. That's all. There's no...
Right. But I guess to make it clear to our audience, forbearance during the COVID-19 pandemic is going to be a little bit different than forbearance after the COVID-19 pandemic, correct?
Yes. Forbearance after the pandemic and before the pandemic, you had, the lender you had to apply to your lender. The lender had to think about it, make a judgment call, and they could deny you.
Right.
Today, what we understand is that if you apply for the forbearance, you should be able to get it. There shouldn't be much decision making. I don't even know if there is any.
Right. Actually, yeah, I don't think there is. I think you simply request in writing, and there isn't any, you just need to simply state that as a result of the pandemic, you have been negatively impacted, which is, keeping you from being able to make your mortgage payment or make it as easily as you have been. Yeah. So they're making it very kind of wide open. And we've always kind of given our disclaimers. We are not attorneys. We're not CPAs. We are the Mortgage Brothers. And so, please consult any type of, authority that you think is important to you, any counselor that you have, any advisor that you have, anyone that is financially, literate. So we're just kind of going over what we've picked up along the way in light of the COVID-19. Yeah. And Ed, can I kind of start this off by saying it's actually quite simple. You can get all confused into what forbearance is and what deferment is. When I hear deferment, all I think about is student loans. Oh, my student loans are deferred. Oh, my student loans are deferred. And it wasn't until you and I started talking about COVID-19 that there's actually a very simple way to approach forbearance and deferment. And it is this. They both press pause or they both limit, okay, a payment that is required. The biggest difference is on forbearance is interest accruing.
Right.
And deferment is basically interest not accruing. So as we think in our heads, they're really almost the same, except when you talk about a mortgage, we're only going to be talking about forbearance. But technically in the world of lending, they're pretty related. Just one assumes no interest, the other assumes interest. In the world of the mortgage, it assumes interest.
Yeah.
So this is not a free pass not to make a payment because you don't have to pay accrued interest. So
that's correct. And so, so that's good. And so what is forbearance? It's essentially pushing the pause button.
Mm-hmm.
Mm-hmm. And let's, for example, from easy math, if your mortgage payments are $2,000 a month, and let's say your servicing bank approves you for a 6-month forbearance, so that's $12,000 of payments you didn't make.
Mm-hmm.
Okay, so technically you owe that $12,000.
Mm-hmm.
And now we can basically, okay, you owe that 12,000, you owe, and of course that comes with interest that's in there as well, that it's been accruing. Do we want to just immediately go into?
You know what? Can I throw this
Go
out?
ahead. Yeah.
So for maybe we can talk about this in terms of there's a red light and a yellow light. There's a red light in that it's a pause button. You screech, you jam on the brakes, and you stop payment. There's also a yellow light, which is basically a partial lowering of a payment. I don't know how common that is, but in our research, that we know that is an option. You need to consult your servicer. But in light of not being able to make your payment, there are some people that say, "Hey, I can't afford my 2,000, but I can afford my 1,000." So there should be an option to be able to do a partial payment. You're looking a little bit.
Yeah, no, I mean,
What do you think?
I think that when it comes to forbearance, I think what we should do is, for the audience, is the application that you're going to fill out. First of all, you're contacting your servicer. Your servicer is going to have all sorts of options for you. And one of them might be, what Tom's talking about, is a forbearance, but maybe a partial payment too. Like, I can afford 1,000. And maybe that's what they do.
It basically be a partial forbearance. So you need to look at it. We were talking before the podcast. We wanted to package this up all nice and neat. There are a number of different options out there. So you definitely need to consult your servicer and dig into what your options are. But
yeah, because you may call your servicer, and their servicer may say, "No, we don't offer that option or that option or that option." Or you say, "Hey, my friend told me that I don't have to make my $2,000 monthly payment for 6 months, and after the 6 months, I don't have to pay $12,000." So that's one of the options too, that some banks are saying, you owe us $12,000 after 6 months. Other banks are saying, well, they'll have an option to add the $12,000 into your balance and recalculate your payment.
Right. So lots of options out there. Okay, now you also were mentioning earlier that really this is it's a loan modification not of sorts. It is a loan modification.
Yeah, I'm pretty sure that when you if you fill out an application, whether it's online, or it probably needs to be online, right, or over the phone, it's going to be under the loan modification. I mean, they're modifying some terms here for you.
Right. If you do anything other than what was in the original agreement, then you were, in essence, modifying something.
Yeah. And they might have a different form name. Like technically they classify it as something else, but it's, some banks might call it a modification under the modification umbrella.
Yeah. Okay. So to make this super, super clear, we're really talking forbearance only. Interest accrues. It's a right that you have been given, provided you are granted, you requested appropriately. But you still are obligated to make those payments. You're still obligated to make the interest payment. We can't tell you exactly how your servicer is going to structure it or require the payback, but it's still owed. There's no reduction of anything that is owed. So, if you let it accrue, it's going to become bigger at the end. So
there's no mortgage forgiveness, no interest forgiveness.
There's no grant portion to this. And that's probably the biggest thing. Yes, you have the right to forego a payment, but when you forego payments and those payments just get larger and larger, like our credit card payments do sometimes, it just doesn't turn out very well. So we're trying to be extra careful in how we advise our customers. This could be useful. Kind of like a reverse mortgage, not many people need a reverse mortgage, but when you do, they come in really handy. So on a forbearance, again, we don't think a lot of our borrowers are going to exercise it just because of what it means down the road, but it could really come in handy for that person that needs to potentially forbear, one payment.
Okay. So okay. I think we did a good job of talking about forbearance, and then that really, deferment's simple. Deferment is just something else, and in the world of when it comes to interest, the bank does not collect the interest. The interest clock doesn't start.
Yeah. Is it fair to say when you hear the word deferment, you can think student loans? Right. I mean, that's 98%.
Yeah. Yeah, that's right. So while I'm in school, for example, my student loans are not accruing interest.
Right.
Okay.
They are in deferment. Hey, why are you going to getting your master's degree for 8 years? Well, because my student loans are in deferment.
Right.
You hear about that.
Yeah.
So
Now I have read stuff. Banks have said that in some cases, I don't know where this comes from, and there might be some legalese here. That's why I'm going to put a disclaimer. In some deferments might have the interest in there, but not that we're aware of. Okay.
mhm,
So anyway, don't say you heard it from the Mortgage Brothers show and
right.
you know
Yeah,
we're not your advisors.
in that case, that would be the other Mortgage Brothers show.
Yeah. So now, so deferment, there were a lot of deferments back during the crisis, the housing recession, the Great Recession in 2007, 8, and 9. A
Mhm.
lot of loan modifications. So there we go. Loan modifications that in those modifications, they deferred the interest for customers.
They actually deferred the interest.
They defer the interest. I have a customer even today who has a loan from 2010, $60,000 of her mortgage is there's no interest being charged on that $60,000 portion. Now, so there's
Wow.
all sorts of different ways the bank can do it, the modification, but that was a lot of deferment was done back then.
Mm-hmm. All right. So I also heard this. You talk about the Great Recession. I heard a quote the other day. This is going to be known as the Great Suppression. I was like,
Interesting. Yeah.
ooh, that's just because the economy is being suppressed.
Mm-hmm.
But that's a different podcast. Okay, so we also talked about what type of loan does this apply to? There's conventional, there's jumbo, there's FHA, there's VA. So who does this apply to? Government loans are all the loans that 98% of our borrowers use. This applies to you. So we're just talking about government backed. And again, 98% of you will have these loans.
Yes. So conventional and then FHA, VA, USDA. So jumbo loans, you are not anything over, anything in that jumbo loan stuff. You're going to have to contact your servicer and see what they can offer you. You are not covered under this provision in the CARES Act for forbearance.
And I'm just throwing this out. You and I have not talked about it, but there is no distinguishment between investment property loans for rental properties, second homes, aka cabins, versus primary. These are all basically loans that are government backed.
Yeah,
again,
good point.
Whether they're for rental properties, cabins up north, down south, or primary. So again, the majority of what we're talking about applies to everybody. Yep. Okay. Yeah. What else did we not cover yet?
Well, I think that one thing I wanted to mention is credit. How is this? People are asking too. How is this going to affect credit with forbearance? And technically, the law, the CARES Act, is somewhere in it. It states that the bank can't report that you're late. Right? So they're not going to report that you're late on a payment.
Wow. However, that's huge.
I was just listening to a show recently, and the bank who had the document for a borrower to sign for this forbearance said that they're not going to report anything to the credit bureaus. They're not reporting that you made a payment or that you are not, and that it may or may not affect your credit score. So
how do we read that? What do we tell our borrowers?
I read that it's negative. I think that's a negative. I mean, if your mortgage is not being reported on,
right now
bureaus don't know how to score that.
Right. How negative, we don't know. But what we're advising our customers is that there really has to be a huge benefit to you in order to go into forbearance because of some of the unknowns. You don't know if you're going to have enough money in the next, 5 months to make your payment. So you might as well make it every month. Mm-hmm. You don't know what it's going to do to your credit. Is it potentially worth the risk of dropping how many points? 1 point? 10 points, 100 points, who knows? So be very careful and be very sure that there's a huge advantage to you entering the forbearance syndrome.
Yeah, and what something else is going to happen too is when a borrower goes into forbearance and then tries to get a mortgage, in the next 12 months, there will be another explanation of why there are these missing payments, and you know what I mean. And and you know what, the credit bureaus, how do we know that they're going to get this right? It's the whole point. And how do we know that when we run our pre-approvals, that our pre-approvals just won't get jammed up with these forbearance items on credit reports? So a lot of unknowns. I don't think that this is again, if you absolutely need it, do it. But if you can just make your payments, do it. Make your payments, because I think that you will be very happy.
Okay. So usually I don't throw something out that we can't answer, but for the heck of it, I'm going to throw something out that we can't answer. What does this mean to HELOCs?
To the home equity lines, I don't know if I think that is not covered here. Because that is not a government loan. That is not a Fannie Mae or Freddie Mac.
Right. Boom.
It's very similar to a savings loan company. It's a bank out there, whatever bank ABC owns that note.
Right. Right. So hopefully that makes sense. I'm glad you were able to nail that. I think you're absolutely correct. That's good.
So I think that here on next in our thought was just here that when you contact your servicer, I mean, Tom, tell me what you think. I mean, they don't have to prove hardship, but we are reading that a lot of times these applications require, these are applications that have been established for years.
Mm-hmm.
Okay. And then they might ask you questions like, why can't you make your payments?
Mm-hmm.
Is there a problem you are facing, that's temporary or permanent? What's the current state of your income, your expenses, your assets, including money in the bank? Are you a service member with a permanent change or station? These are questions that may be on the application.
Yeah, and likely it could be on the application. And if you look down at the COVID-19 asterisk, it may say not obligated to answer any of those questions, because some of the research that I've done basically gives you kind of a carte blanche right to say, due to the pandemic, I have hardship, period.
Mm-hmm.
And what the CFPB is saying is that is enough. Now again, look at the fine print to make sure. But
your bank may say just fill it out and just however you want, and we'll review it. But again, don't be surprised if you see those questions asking about the hardship.
Yeah, exactly. So, okay, well, sorry, folks. So we have to talk about this. We'd rather be talking about, rising home prices and, economic recovery, and interest rates continue to drop to, all-time lows. But we know that we're still in a very sensitive, delicate time. Still sheltered in place. It seems like the news is getting more and more positive out there. So that's good. We hope you continue to stay safe. And again, we're sorry we have to be talking about this, and we hope for the best, that everyone get back on their feet and be able to make those mortgage payments, so that we can continue to live free and happy.
That's right. And, we do this every week. So be sure to, if you like this channel, subscribe to it. If you have a question, send us a question. Our emails are here, and you can always just let us know. Let us know what you want us to maybe talk about next time. And, of course, you can like the page and turn on the notifications as well on the YouTube.
Sweet. Okay.
All right, everyone.
Hey, thanks, folks, for listening. Let's call it a day.
Peace out. Have a great week. Hey, guys. Thanks for listening to the Mortgage Brothers Show. Please let us know if you have any questions you'd like us to answer on this podcast. You can email your questions to tom@azmortgagebrothers.com or yours truly at eddie@azmortgagebrothers.com. And be sure to ask us for a free quote on your next mortgage. Tom and I will personally work with you and help you through the whole process. Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917 and 1618695, Equal Housing Lender.